Eric Liebenhagen here, guiding you down the true path to financial harmony. You know, one of the reasons why most clients come and find me is to find out if they're overpaying their taxes. And my common answer in majority of cases is yes. Most private practice owners are overpaying their taxes, and it doesn't really matter if they're a sole proprietorship or a corporation or anything in between. There's usually some provision of the tax code that they're not utilizing to their maximum potential, to its maximum benefit. The one thing that I always do as part of my analysis that I want to share with you today is figuring the effective tax rate. I think of this effective tax rate pretty much like the KPI for taxes, right? So it's a useful tool to understand because of the progressive nature of the income tax bracket. So say, for instance, that you're in a 32% tax bracket, okay? That doesn't mean you're paying 32% of your income in taxes. The tax code, or the tax brackets rather, are progressive in nature. So some of that income gets taxed at 10% and then some more at 12%, all the way up until you reach the 32% bracket in this example, or until you exhaust all of your taxable income. So your effective tax rate tells you what percentage of your income overall is actually being paid in income taxes. All right, now let me be clear. There isn't a definitive rule that states that if your effective tax rate is high, you're definitely overpaying your taxes, right? We use this metric a lot like any other benchmark or KPI for private practice, optometrist, or any other business, like debt to income ratios or profit margins, right? A KPI gives us an idea of where to start looking for improvement in somebody's comprehensive tax and wealth planning strategy. So the first step is really to figure your effective tax rate and then compare it to national averages and decide if a tax strategy warrants more of your time and effort. There are a couple of ways to calculate and figure out your own effective tax rate. The first, and probably the simplest, is to just ask your CPA or your tax preparer. A lot of tax software actually figures this for them as an overall analysis of your return. The other way is to calculate it yourself, which is fairly simple. So what you're going to do is look at your personal tax return and find the page that says 1040 in big bold numbers in the upper left-hand corner. That is your personal tax return. It could be 1 or 2 pages, depending on the year we're talking about. The two numbers you're looking for, which are fairly easily identified, they're usually bolded, is total income and total tax. So very simply, we calculate your effective rate by dividing your total tax by your total income for the year. The specific line items or line numbers from that Form 1040 are constantly going to change year to year from 2018, 2019, 2020, and on forward. So by the time I list those out, it's going to be outdated. But you can really look at any tax return, especially federal return in recent years, and always find those two lines labeled total income and total tax. Once you have those two numbers, you simply divide total tax by total income and come up with that percentage. So this is your federal effective tax rate for that particular year. The national average for the top, say, 25% of taxpayers in 2017 was 18.2%, according to a recent analysis by taxfoundation.org. So how do we decide if the results that you're getting warrants more time spent developing a better tax strategy? When someone is at or above the national average, I know there's usually a way to save them money. Most of the clients that I've helped have an effective tax rate of 15% or below. So even though their adjusted income may put them in the top 25% of all taxpayers, which, back in 2017, that only meant adjusted gross income was higher than $83,000 and change, again, according to that same study, they're still getting really low effective rates. The bottom line is that a quick look at this metric will show you how you compare, and it's going to give you more of an objective basis for discussion when somebody tells you that there's nothing else they can do to lower your taxes.